is this a sign of the early stages of a currency crash, or is it just a small blimp in the road that eventually will be a distant memory?
I think that'll partially depend again on these kind of government decisions. And I agree. I mean, the general kind of incentive is towards more stimulus on their part, right? So few of them want to just stop the stimulus and then basically get voted out of office. Now, there's some dynamics there between, say, parties that are out of power can try to make that happen so they get back into power. And so you kind of have that cycling of politicians over time. So that's why I think those dynamics are worth watching. But overall, I mean, this in say crack up booms in previous kind of periods in history in different countries, they were often associated with kind of a speculative mania in the early stages of it. Now, how far this one extends, again, will partially depend on fiscal actions. But for example, if you look at, we've already had some degree of currency devaluation. So if you look back for the past 10 years, T-bills, for example, spent most of their time with negative real rates, meaning that inflation, even as officially measured by CPI, let alone the imperfections there, but CPI outpaced T-bill rates for the better part of the last 10 years. And then as you look kind of early this year, that hit a pretty wide gap, right? So T-bills are yielding basically zero. Same thing with bank accounts, and yet inflation is up to about 5%. And so, if you're holding cash or cash equivalents, you're getting devalued. And so it's no wonder that people have gone into, say, precious metals, cryptos, meme stocks. And so even people that normally wouldn't be investors have played their hand at investing. And of course, it's become some of a social media, phenomenon of TikTok investors kind of sharing their best trades and all, a proliferation of people that are interested in macro because we're in this kind of unusual environment. And so that's kind of to be expected.
How far do you believe it can go? I mean, I sit and I wonder about it down the road, and I wonder, where does it go? There is, I believe, a vested interest in suppressing some level of the CPI, right? Because then you've got to readjust Social Security, all these types of things with the rate of inflation. So then I wonder, well, you look at Russia, all these different places where the empire was collapsing, the currencies, everyone's starting to realize the currency is worth less and less, but the government is continuing to say, hey guys, everything's fine. And then there's this stage that you get before basically, people lose the power system loses its power. And I wonder, are we headed in that trajectory where there is ultimately a lapse of faith in currency? You said part of it depends on the government's response. And I'm just curious, what's your personal opinion on how this really plays out?
Yeah, my overall opinion is that we're probably going to have more spikes of inflation like we saw this time. Like I said, I think energy markets will drive more of that later this decade. I think they probably will at some point pass an infrastructure bill before the midterms, but we could be surprised they might not. And so overall, my base case is to see an elevated period of inflation for the 2020s, and then it'll come in these kind of spikes rather than this kind of grinding inflation. So basically what I've been kind of arguing is that a lot of people refer to the 70s when they think of inflation, but the 70s were very much loan driven. So banks were extending a lot of credit, and only towards the end of the decade did you start to see kind of significant fiscal deficits. But even then, they were actually pretty small as a percentage of global of national GDP compared to, say, the 40s or what we're experiencing now. And so in many ways, I point to the 40s as the closest approximation of what we have here, where it's very fiscal driven inflation, and it's at the end of a long-term debt cycle, fourth turning type of phenomenon. Now, if you look at the 40s, for example, inflation averaged around 6%, but you had spikes, right? So it got as high as 20%, then it got as low as like negative 2% briefly. And so if you look at the whole average, it was somewhere around 6%, but interest rates were, roughly zero on the short end of the curve. They were capped at 2.5% on the long end of the curve. And so you got devalued in these kind of big devaluation pulses if you were holding cash or bonds. And so I think the 2020s, I think the magnitude is really kind of open for interpretation. I think that'll partially depend on how tight energy markets get, what some of the government decisions are. But I do think we're kind of in a similar pattern where we're going to have persistently negative real rates for most types of cash and bonds for most of the 2020s decade. And overall, I think the 2020s will be a higher average inflation level than, say, the 2010s decade by probably a pretty comfortable margin.
What do you make about the government digital currencies? Now, the United States and its minions have been discussing the necessity of digital dollar to compete with China. There was at Bloomberg, many of those places covered China's, where it had essentially disposable time money and all these all these levels to it. What do you make of the central bank digital currencies, government digital currencies?
It's something to watch, and I view it mostly through a kind of concerned lens. Obviously different states have different priorities with it. And so, China has been one of the countries that has spearheaded this. And of course, they like having a lot of top-down, state-driven authoritarianism, right? So they like to be able to surveil what their citizens are transacting in. They'd love to be able to block transactions. They have facial recognition cameras everywhere. So if there's a Wall Street Journal piece, for example, pointing out that you could do a thing where if someone jaywalks, they get caught on film and then their accounts automatically deducted with a fine. And that's a benign thing. I mean, there's obviously more dark routes they can go with that. And so I think China clearly is interested in going that route. I'm hoping that other countries kind of don't want to go down that path, but we are starting to see Europe and the Fed are basically also interested in central bank digital currencies. One way to think about that is that right now under the current legal structure, central banks only have so much power. They can't give out grants to people, for example. They can only essentially change interest rates and buy or sell assets. And so that's why, for example, after the great financial crisis, we didn't see a really big increase in broad money supply because the Fed couldn't just hand out money to people. But so in 2020, what we had was the combination of fiscal authorities, basically handed out money to people, and the Fed's role was to finance it. And so you still had elected people making those decisions rather than the unelected people.
Before we continue, help us by smashing that YouTube like button and subscribe now to this channel. This shows the algorithm that you value the information, and it helps us spread this message. Sharing is caring. Please like and subscribe now. Thank you. And now, let's continue.
And so there's basically checks and balances, even though people can argue about how much power each side should have. But in the current legal structure, there are some checks and balances on say, what central bankers can do. Whereas if you say change the Federal Reserve Act, or if you change some of these laws, where central bankers can, put money directly into people's, say, Fed wallets or whatever, their central bank digital coins, they go around the banking system. That could, from their perspective, they like that because they have more tools to stimulate. If they want to, if there's a recession or if there's deflation happening, they can basically inject money into people's wallets. They can make it time sensitive so it expires. They can have different interest rates for different groups if they want. But that obviously that's unelected people basically making what is essentially a fiscal decision at that point. And so that's one of those things I have trouble seeing something like that get through Congress, at least as currently constructed, because Congress would have to essentially cede some power to the central bank in order to have that kind of program in place. And so I think this will be something to watch, I think, in the years ahead. The Fed is kind of behind the curve compared to China because the Fed is, kind of at the heart of the current system. So they've had less incentive to kind of change over to a new system, whereas China is specifically, they're trying to go around the SWIFT system as much as possible. They want to be able to buy commodities in their own currency. They're really big fans of the surveillance state, and so they've had a lot of incentive to kind of spearhead that. Where the Fed is I think a good thing, and it's kind of behind the curve in terms of enacting those types of policies, especially because they would need Congress to go along with it.
Interesting. I hadn't had somebody say that. I wonder if there's a way through national emergency to subvert it, i.e., economic crises. So that'll be interesting to watch. On the subject of commodities, did you see Paul Tudor Jones the other day I think it was on NBC, or it might have been on NBC, where he was talking about commodities, and he was essentially implying that so underfunded and, a potential for basically them to be squeezed, whether I think he referred directly to Reddit traders, but he also mentioned if big money gets in. What did you hear that? And what were your thoughts on that?
So I saw clips from that interview, and I generally agree with them. And so, I do think that 2020's decade is going to be a decade for commodities compared to, say, the 2010s, which was a very, for the most part, a very bearish decade for commodities. And so that decade was characterized by oversupply and kind of weak demand. Whereas now, with all the stimulus that are happening, there's higher demand, and we haven't done a lot of capex in many of these. And so I do think the 2020s are going to have tighter commodity markets, higher commodity prices, more pro-inflationary decade. I just don't think it'll come in waves. Basically, there'll be periods where it's happening, periods where it's not happening, and it'll be kind of these periods where inflationists will be happy, and then deflationists will be like, I told you so, and then there'll be like another round. For example, we have another kind of increase. And so overall, I agree with them that I think inflation is going to be elevated probably for longer than people think. Just not necessarily in a straight line when you look at, say, the year-over-year rate of change.
Okay, so non-linear then. So then as an investor in commodities, whatever they might be, and let's include gold and silver stocks in that equation as well. One of the difficulties is when it's moving nonlinear and you go through, as you said, a period where maybe it's a period of deflation or just not ever growing inflation. It's easy to then think that the trend is over. So is this a hold for a decade, or trade and step in and out through the correction phases, or hold through?
I think it depends in part on someone's investing style. The way I'm approaching it is I kind of have a base commodity producer position where I'm just kind of buying and holding a big chunk of commodity producers and certain commodities as well, ones that are, like say gold and silver. And then, around that kind of base position, I'm willing to add some chips to the table, take off chips to the table based on what happens with sentiment and overbought conditions. And so, for example, I was really bullish on copper in the mid 2020. But then we had, over the next, say 6 to 8 months, everybody was bullish on copper. It was like the most consensus thing in the world, and it went up pretty dramatically, got overbought. Some of these copper stocks really exploded, and even though I think that they probably still have a longer runway ahead, I trimmed those positions because it just became a very consensus overbought trade. And so basically, my kind of approach here is to kind of rotate into whatever commodities are kind of out of favor. Build up positions, dollar cost average into positions when they're kind of weaken, and then kind of basically take a little bit of profits when they spike, when they go up pretty substantially when everybody wants them.
What's your favorite commodities?
I mean, say longer term for the decade, I definitely like oil and gas. That's one of the least consensus ones. I mean, there's pretty big consensus that oil and gas would have a bounce. But the consensus is that electrical vehicles are going to come in and just, fossil fuels are not going to be needed anymore. But if you look at, for example, long-term history, whenever we add new energy sources, so far we don't really replace old energy sources. We just add on to them. And so, I think, for example, oil and gas could decrease as a percentage of our global energy share, but they're unlikely to decrease in absolute terms. And when you combine that with the fact that there's not a lot of new capex happening in most of the oil and gas markets, I do think that we could have some tightness as you look out later into the decade. And so I do like some of the transporters or the producers, but specifically I like the conservative ones. So the ones where they have strong balance sheets, low cost production, and so they can get through the bear markets no problem, and then also generally enjoy upside from the bull market.
What to do in such a situation? Inform yourself and keep your financial education strong. We from the Compact Group offer our loyal subscribers a free educational portal with first-hand monetary, financial, and economic knowledge. Enter our invite-only Insider Club by clicking the link below. You will get access to first-class information far earlier than the rest. We have prepared a special deal for all our members where you can access a giant pool of Robert Kiyosaki's financial wisdom for just $1. To find out more, simply click the link below and join our Insider Club absolutely free. But there is more you can and should do. Build up several streams of income. More and more people realize that they have to take their future in their own hands, but they don't know how and where to start. We from Compact offer our Insider Club members unique opportunities. Strengthen your financial muscle and get the edge. Click the link below. Become part of our free Insider Club. No financial obligations. But there's one important thing you have to know. You have to become active. So do it now. Become active and see you on the other side.